So, I wanted to give you guys a little bit of a run through on my thoughts as we go into this week, just because it's a tricky week. Um, the Fed is expected to cut interest rates. And I don't know if you guys have been seeing this, but look at this right here. If you don't know what you're looking at, let me explain it in simple terms. Basically, we actually saw a big swing in favor of a 50 basis point cut on Wednesday. What the heck is a basis point? Basically, it's a fancy way of saying a 0.5% reduction in the Federal Reserve, which is the central bank of the United States, their lending rate or their borrow rate. So we see a shift now heading into the week. I would not expect this, guys. I did not expect such a big shift on the very week that we're expecting interest rate cuts from the Federal Reserve. I did not expect us to shift once again from 35 basis points to from 25 basis points to 50 basis points on the week of the cut. Now, we don't know if this is going to happen. 65% chance. This is just a chance, right? We may see a 50 basis point cut. We may see a 25 basis cut. I've made my opinion on this pretty clear. I do think that we're going to get 25, even though now it has become the less popular decision or opinion. I still kind of think we could see 25 basis point cut. And we have to think about what this signals. What is this telling us? If the Fed goes out and they say, oh, we're going to cut 50 basis points. The thing is, if the stock market wants to rally, it's going to find a way to. They might say 50 basis points, this is going to really relieve pressure. Sectors that are under pressure from high borrowing costs, they're going to rally hard and the market's going to rip. So there's always a bull case to be made, to be fair. But let me give you the bear case. And I'm not a bear, but let me give you the bear case, which is if they cut by 50 basis points on Wednesday, 25 or 50 is nothing. It's not going to do a huge amount in the short run. It's more about what it signals, right? If they cut by 50 basis points on Wednesday, what does that tell us about where the Fed is at? It tells us that even though the economic data seems to be coming in decent, the Fed may be a little bit concerned that the deceleration in the economy could accelerate. Like the slowdown in the economy could accelerate. That, in my view, the CNBC bulls are going to say something otherwise. They're going to say 50 basis points, this is just relief. We're going to see a rally. I would caution that thought because, again, a 50 basis point cut, to me, signals the Fed is a bit weary about what could happen to the economy. Now, let me kind of throw another idea at you. If we get 25 basis point cuts, a 25 basis point cut, you could just flip that argument. That's the tricky part about this. You could say, oh, this is not going to provide enough relief for parts of the economy that are more sensitive to rates, right? Real estate, technology, borrowing cost heavy, utilities, things like that. It's not going to provide as much. But you could also make the case that the Fed feels confident if they do 25. And I actually think, again, I'm now not in the popular crowd on this thought, but I think that this is the more likely scenario that the Fed will go with. Jerome Powell, who is, of course, the chairman of the Federal Reserve, has been pretty consistently slow to he's not one to make quick decisions or jump to conclusions quickly. That being said, it is a committee. They make a decision together. So I'll tell you this week I think we see 25 basis point cuts, but I'm not a fortune teller. I could be dead wrong. That being said, I'm going to go into this week with my best judgment pointing towards a 25 basis point cut.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
Now, what does that actually mean? Well, if the market's getting kind of pumped up on the idea of a 50 basis point cut, it may not be too far-fetched to say, well, if we only get 25, there may be a little bit of hope that kind of gets slashed with that idea, and that perhaps Fed rate cuts are not going to come, piling in, and may cause a short-term reversal in the stock market. We've got the NASDAQ sitting kind of at resistance here, right along this trend line. You got the S&P 500 right at all-time highs. It's possible that if they come in with a 25 basis point cut, you may see the stock market lower in the short term, the dollar higher in the short term. But I'm going to go out and say that this is my game plan for the week. If I think if I'm right and I get what I want this week, which, doesn't matter what I want, but if I'm right, if a 25 basis point cut happens and there is some hopes that get slashed and cause some dips in the market, I'm a buyer. Okay, because I actually think that a 25 basis point cut would signal confidence. It may slash some hopes for rate cuts, or the rate cut junkies might come running in the short term, on the idea of 50 basis point cut. But I would like to see the market see a bit of a pullback on the thought or the fear, oh my gosh, we're only going to get 25 basis points. I actually think that would be the better case for the market. I think that would be more bullish. Does it mean I'm bearish if we get 50 basis points? No. In fact, if we get 50 basis point cuts, I have to look at the Russell even closer. Here's a look at the Edgefinder's current top setups algorithm. We've got the Russell here on the bullish side. We got the Dow Jones on the bullish side. We got copper, silver, dollar CAD, euro CAD, platinum. We got some readings this week, which is exciting. Finally got something to look at here. On the flip side, we still got Nikkei bearish, Aussie Swiss bearish. So, where am I most interested? Well, I got to say, I'm watching the indices very close this week. So if I'm taking a look at, the Russell, right? Here's the Russell. We've got some levels of resistance here off of the daily chart. So you've got resistance here, resistance here. So if you get a 50 basis point cut, the Russell's probably going to rip, right? The Russell's probably going to say, heck yeah, we got the rate cuts. We're going higher, and the Russell might have a breakout this week. That's very possible. If that happens, if you get 50 basis point cuts, I'm going to be very convicted on the Russell. I'm going to be looking for pullbacks. I'm going to be looking to buy into that strength if we get a 50 basis point cut. And if we get a 25 basis point cut, I'm going to watch things like the NASDAQ. And I'm also interested in the Dow Jones. Look at the Dow Jones, by the way, confidently testing the highs as we speak here, guys. This is US 30, Dow Jones, whatever you want to call it. The Dow is right up near its all-time highs. If we get something like this week, I'm a buyer. I am pretty much bullish across the board on the indices. And if I sound different than I did in the previous week, it's because the Edgefinder has flipped a little bit. We had good inflation data. That's hard to fight, right? We do get retail sales numbers tomorrow, which could flip things, a little bit around if they're not as good. But I like the indices going into this rate cut situation because I don't think that the economy is falling apart. And that's an important distinction, right? If you're a bear on the stock market, you probably want rate cuts plus stock market falling because the economy is doing poorly. But I don't really see that as kind of the base case right now. I actually think that the most appropriate way to approach this in my strategy and my approach is looking for retests, looking for pullbacks. NASDAQ's down 0.5%. We're sitting at resistance here. And I think that, am I willing to take trades ahead of the meeting? Yes. If I can get the right setup, if I can get the right move here, then yes. I think we get 25 basis point cuts. If I'm wrong about that, it's not the end of the world. Doesn't mean I'm bearish. But if we get some 50 basis point cuts this week, it's going to be an interesting one. I just think that 25, let's just take a quick look. Like why do I think, what's guiding my thought on that? Why 25? Well, remember what does the Fed want to avoid? The Fed wants to avoid inflation becoming a problem again. So let me show you something. The Fed has had a nice win streak here with inflation starting to come down, okay? The Fed does not want inflation to spike back up. Now, if you cut by 50 basis points, and then you cut by another 50 basis points, you cut by another 50 points, if you start doing that, if the Fed starts cutting rates too quickly before the, and causes the economy to just go right back into hyperspeed, the issue is that's going to bring back inflation real quick. And the Fed has seen this story play out before, and it's ugly. Inflation coming back for a second round is usually more vicious than the first one, right? Look at, in American history, we've had a couple instances where the Fed has cut interest rates too soon, arguably. I mean, hindsight is 2020, but hindsight wise, hindsight aside, they've cut rates too soon in the past and seen a reacceleration of inflation. They don't want to repeat that mistake again. So I think 25 basis points is a prudent thing to say. Not to mention, guys, we're at 2.5% inflation. We're not at their target of 2, right? You know what a comparable, I'm not sure why this is not working today, but if we were to pull up the UK's inflation rate, it's like right near 2, and they're still hesitant to cut because they know, right, that if they cut too soon, inflation can come right back. So at 2.5%, we're still off our target of 2. Yes, we're going in the right direction, and the Fed is trying to look, be proactive here. We do need to be cautious that, if you're thinking 50 basis point cuts, then first of all, you're a super dollar bear. And I'm more bearish than I am bullish on the dollar. But recently I've very much become kind of neutral because, again, I don't think we're going to get 50 basis point cuts. But again, I'm putting it all out there. There's a lot of YouTubers in the trading space, investing space, who won't tell you what they actually think is going to happen. This is what I think. And I could be so wrong. On Wednesday, my comment section could be so full of people saying, Nick, you idiot, they did 50. And I would say, you know what? It's not the first time I've been wrong, and it won't be the last. Why am I still thinking 25 basis points is a reasonable thing to expect? Well, GDP growth. GDP growth has been better than expected recently. It's been pretty strong, actually. Remember, the Fed doesn't want to reaccelerate inflation, and a strong economy, which we don't have necessarily an incredibly strong economy, but you got to give it some credit here. We've beat expectations on the GDP front for some time now. Now on the jobs data points, yeah, you can start pointing out some weakness here. You had some weak jobs prints, but unemployment rate went down in the previous report. We didn't see 4.4 or 4.5, right? We didn't see a big jump up in unemployment rate, which would have suggested that the labor market is really, really sliding. So you kind of had this mixed jobs data last time around. You have inflation cooling, yes, but still off of its target. So I'm just kind of on the side of caution this week because I think that there's a lot of hype around rate cuts that's causing the stock market to get very, very bullish right up into the event. And my cautionary tale there is that if you're somebody who's like, oh yeah, bring on the 50 basis point cuts, it's one of those things we just have to be careful what we wish for. Because if you want 50 basis point cuts and that signals, oh, the economy is falling apart, or just as bad, oh, that signals acceleration in inflation. If we start pricing in, huge expectations for more rate cuts quickly, that could be very, now, at the end of all of this, you might say, but Nick, you're literally long gold. Doesn't this help you if they cut by 50 basis points? Absolutely it does. Absolutely it does. If they cut the interest rate this week by 50 basis points, gold likely flies higher. And I'm long gold, so I can't complain if that happens because I, again, would make money. But this is not my only position. This is not the only thing I'm watching. Primarily, I trade indices and gold. And right now I've got a great trade going on gold. I would like it to keep going, but what I'm going to actually be doing in terms of action is leading up to the event, I'm going to be looking for chances to potentially trail a stop to lock more in on this trade. Because if I'm right, this is almost like a hedge for me if I think about it. If I'm right about 25 basis points, gold probably pulls back, right? That's probably what happens. Remember, gold rallies on bigger and higher rate cuts than expected. So if you're somebody who's a gold bull, you probably do want 50 basis point cuts this week. You want bigger. You want weakness in the dollar, and that's going to bring on some potential weakness in the dollar. If you're like me and you think 25 basis points is coming, this is my hedge, right? I'm long gold. I bought this, a couple weeks back. This is my hedge. So meaning if 50 basis points come out, great. You know what? I was wrong, but I made money anyways. I'll take that situation. I've locked in gains on this position. I'm looking to lock in more gains. So I'm looking to a trail behind a higher stop loss if I can find it. So COT data, some interesting. So this is the week-to-week buys and sells. We got platinum getting bought by institutional money, the yen, the dollar, the Dow Jones, the Russell, South African Rand, silver, copper. Those are your buys. A little bit of selling on SPX, Bitcoin, NASDAQ, CHF, 10-year treasuries, gold, euro, pound, Aussie, Kiwi, CAD, Nikkei, oil. So there's your sells and buys here for the week, according to institutional money.
But who is going to cut rates this year? And I think that's very important because somebody asked earlier, how does rate cuts mean for the dollar? And I think that it is very important to, go by the first question I always ask you as the yen man and as the mentor here is, what does price do? So rate cuts by the end of the year, 118 basis points is pricing currently, with a 59 basis point of a double or 50 basis point rate cut on Wednesday. Then we have ECB. They have 72% chance of no change in the next meeting. Bank of England, no change. Bank of Canada, 76% of cutting in their next meeting. I think that's supposed to be in October. I think it is. RBA, no change. And Reserve Bank of New Zealand, 75% they are going to cut in the next meeting. Again, I think it's either September, October, not too sure. And Swiss National Bank may also cut in their next meeting, and slightly, but now we have turned from slightly chance of rate hike to most likely we're going to have no change by the Bank of Japan. Those are published about six hours ago, I think it was. So there is that. Very much welcome. I'm Ivan. I've been trading for 10 years. I suck at this. So what do I do? What I do is because I try to help people see the light, see what they're doing wrong, and try to improve you guys. That's kind of why I'm here, right? So for the longevity of everything, we're going to talk about a long thing. And there was someone would say, yeah, buy $1. Why not sell it? Okay, I'm not here for that. I'm here for education. I'm here for, giving you the right direction. Then it's up to you, whatever you want to, if you want to put this information into practice or actually leave it alone. It doesn't really care to me, because the facts are that the S&P 500 for 2024 has been about, I think this year today is about 20% now. If you in your trading can do better than 20%, if you do worse than 20%, I'm not going to tell you, but a good deal would probably be having something in S&P 500 or stocks or something. Now, is that a good idea? Well, it is so-called passive by some experts. It's so-called you just buy and hold. That is one strategy. Or you try to catch bottoms. That's a bit more difficult because last week I did poorly yet again as a trader, and I sold somewhere. What did I sell? I sold somewhere here, and I thought this is going to go lower. And then I'm like, okay, so, but I've always told you guys, for those who have been following me for years, I've also said always, stock market is going to go up forever. Forever. Up. But then there have years in this data that has like, well, if you ask COVID years, you say, okay, it's actually going to be a drop sometime, somewhere of about 36%. All right, cool. I'll take it. But then since COVID, If you bought the peak, you are about 65% up. What does that mean? What does it mean? It means that every single thing that you're trading, every single thing is set up to make businesses, to make money. Meaning, what is money? Money is money you have in your account, money you have receiving from your employer, money that is coming from the central bank to the banks. Everything is made to set up that this money will grow. Okay? How does businesses grow? You have taxes, you have policies, you have the human's desire to do things better than it was yesterday. And efficientizing, and for example, AI. If we didn't have the ability and the need to do something better, we would never have AI. So we'll probably never have chips, we'll probably never have computers, we'll probably never talk to each other. Okay? If that is always going to go higher, if NVIDIA is always what is it called? What is NVIDIA? NVIDIA. Okay, cool. NVIDIA. If NVIDIA, which is a lot of the gains recently, if that company went bankrupt today, that's going to be that way. We don't want that. We don't like that. So when it comes to Forex, when it comes to commodities, comes to business, comes to stock market, comes to anything and every single financial transaction you ever do, it is in the belief that it's going to give you value. Therefore, we are also looking into what is maybe not. Yeah, sorry, that was not supposed to be happening, but cool. What is the stock market doing today? NVIDIA is a bit down. Apple is a bit down. Amazon is a bit down. Microsoft is a bit up. Oracle is a bit up. Meta is a bit down. But by the end of the year, they're probably going to be pretty much. Apple's up 15% by year to date. Nvidia is up 134. Microsoft is 15. Amazon is 22. Meta is almost 50. JP Morgan is 22. Google is 13. What does this matter? It matters because whenever you trade, whenever you're trying to find your setup, whenever you're trying to always look for that next opportunity, breathe. There is a day tomorrow. Okay? Today we have Empire State Manufacturing Index coming at 11.5. It's a bit better than expected. If you look at the data, give or take, it's within the range. It's not horrible, not better, but it's actually quite good. So not too bad. Not as worse as it was back in January, February. But okay, cool. It is good as November last year. So we are improving again. Good. What does this mean? Manufacturing PMI is, it's all right. It's a gauge of business conditions in New York for New York manufacturers, and manufacturers on the entire economy is rather a bit of a smaller, but still it gives you a bit of direction of where the market is current business is currently doing. Because by the end of the day, that's what we're actually trading. Why do people call the yen mad? Because I have found love in the yen pairs, and you might ask yourself, Ivan, why on earth do you do that? Well, it is a couple of good reasons. It is, in my world, very directional. Whenever it does direction, it's not too bad. It follows what I call seasonality. It goes up in certain directions and down in certain times, and I'm like, cool, I will do that. So I found a love because when it goes risk on, it really goes risk on. Okay, and then it's a funding currency. It has the lowest interest rate on the planet at the moment, almost. And it's very weak. It's always going to be weak. The Bank of Japan is spending a lot of money to make it weaker, to try to create some economic growth for those businesses in Japan, which has been trying for 30 years. It has been failing miserably, and they might now be able to succeed. I can't speak today. I do apologize. Let's start again. I'm trading yen most of the day because it's familiar to me, because that's my new wife. Sorry, wife. And it's it has a fundamental / monetary policy direction for the past 30 years that pumped money into their economy and they haven't really gotten anything out of it, which is you're not able to. So, that's that. So why wouldn't I? Ivan, can you touch on retail sales importance before Wednesday, please? Retail sales isn't your most important thing in the world. Why is it so? Because what is retail sales? Let's do that. That's kind of why I'm, here, right? Retail sales is basically what you buy at the grocery store without counting for inflation. So, let's say you buy an item, let's call you buy some jeans, you want some nice jeans. And then next week, you buy jeans again. But then, it has gone up 10%. Woohoo! 10% in one week. Then retail sales will say the goods and services within retail sales are 10% up. But the inflation may have been up 20%. So actually, the jeans from one week to another decreased in value generally in the economy. But if you just take the retail sales only, they have gone up 10%. So it's a bit misguided situation. It's a bit misguided thing. It's still a part of CPI. It's already inside CPI. So it's kind of like it's a gauge of where CPI might be, but it doesn't tell the whole story. But you still want to look at it because it gives you an indication for CPI. So you're like, well, somewhere in between there. I'm wondering if bad retail sales maybe can push 50 base cuts. That's gonna be a horrible. That's gonna be a horrible retail sales for that to ever be close. You have to kind of go back to again, Bashi, breathe. Okay, cool. So what do I mean? Is CPI, PPI, and PCE is already out. We already know them. We already have the trend. We already have those numbers. Those are the most important inflation numbers. Okay. Going forward, it isn't as important for you to think of retail sales because it's already inside CPI, and PCE has become year over year has become like the new thing to look at. Okay, cool, good, great. So setups for me, I am mildly looking for sells on yen pairs, mildly, because I believe this should turn around soon. I've already set up my bottom line where it should go to, which I said back in September or August. Actually, I set it over here, like 8th of August. This is where we should go back to. Great. Now I need to see the reversal and to see bullish trend. But then I've also said I don't think this is going to happen until 23rd of August, 23rd of September. So that's a 1 week from now. What's going to happen this week? I don't know. You tell me. So, a bit indifferent. And then wondering why. Why do I even do this? Because the most important thing that I do here is I don't give you financial advice. Think for yourself. That's why I'm here. Because you are your greatest expert. Yourself can only do what you can do best is analyze information you are provided with through the Edge Finder, through the internet, through your friends and whatever. When you put yourself into a position of when am I going to invest? When am I going to do this? I have come to a conclusion, which also Nick has come to, by the way. Somehow we are more waiting. Why do we wait so much? Because if I try to trade here, I'll make money. But I also know that it's a time of I will not make money. And then I will make money again. And then I have not made money in those. Okay, I haven't sold this fall. But I would have made a lot of money doing that. But what was my theory? What was my plan? My plan was to buy here and buy there. So I did so. And my plan was not to sell here, which I should have, I could have, I would have. All of those. but that's 2023. So I am right now just waiting for bullishness. I can say I can sell this week, but it's a bit pushing it. On the other side, am I going to be true to what I've always done, what I know it works, or am I going to be true to pushing YouTube ideas? I don't know about that. So, I can say, oh, it's going to be boring. It's going to be, waiting for setups. Yes, sir. That's what we do, right? So somebody said, buy dollar. And I've already said to you, probably a million times already, but I'm going to say it again. What is the current monetary policy direction? Somebody said rate cuts. Even speaking rate cuts, dollar fell. And dollar has been falling dollar fell in December 23 because of rate cuts. It was then through CPI and everything else was priced out because, wait, we are not going to have rate cuts. We might be rate hikes. I said it back in April, I'm like, what if we have rate hikes by the end of the year? I made fun of that. I made it funny. I think it was 8th of April for those who wants to look at that. But I made fun of it because we had completely turned the monetary policy outlook, okay? That's always going to be your guidance. It doesn't matter if you're going to be 50 basis points, 100 basis points. What is it going to be next? And we are 2 to 3 months into the future. And you're wondering to yourself, how is that even possible? Because we've already fallen from 106 to 100 on dollar index just by expectations. We haven't cut a single basis point yet. Yet we are down 5%. Boing. Make that make sense. Basha asks, do I have negative months? Oh, I have negative months, and I can tell you for free, those are horribly good. No, as I try to look for 8%. I need to reduce my risk, by the way, if you're wondering, but I've tried to gain 8. I should risk 5, but that hasn't happened lately. But yeah, it's, and also the count that you have online that you have access to. I think I started at 100. It's now 150, I think. So, but that has also been down some days. So, if I'm just trying to grow that one more than anything else, and I have to have higher risk. I have a too high risk on that. But my other account, on my general account, I should have 8 a month. Doesn't always hit it. You can have -5s, -10s on those attempts, but overall should in the end be, give or take, positive at the end of the year, number one. And if you're better than S&P 500, great. And if you're not better than S&P 500, really do yourself a service and negotiate. Review your strategy, review what you're doing.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.